what is your take on how this rate hike will affect the labor market? And should we be expecting more layoffs in the future?
So I think, first on that point about sort of what we've seen already in the labor market, I think it's really important to distinguish between what we're seeing in, say, the tech sector, or sort of the interaction of tech and the housing market and sort of the labor market writ large. In tech, there is, some, at least compared to a few months ago, some relative weakness, some pullback in hiring intentions. And we're seeing that indeed in our job postings data, that postings for software development jobs have pulled back a little bit. And in fact, that decline seems to have accelerated over the last week. That being said, overall demand is quite strong for those positions. It just seems like there's a pullback. But when you look at the broader economy, things are a little bit stronger there. There may be, big announcements of layoffs in some tech-related companies, but if you look at, say, UI claims data or data from Jobs Report or JOLTS, layoffs are still quite low. They may have ticked up a little bit in recent weeks, but they're at levels that, if 3 years ago you had said, hey, it's 220, 230,000 claims in a week, you would have thought, hey, that's still a pretty healthy labor market.
I wanted to ask you though, I was going to save it for later, but since you were talking about it, I mean, we had, what was it, 1.9 jobs for every one unemployed person. And we were kind of focusing on that metric for a while. Is that still the case? Are we seeing a reduction in the amount of jobs available for unemployed, or is that increasing possibly?
Yeah, so I think the latest data that we have from the government, so from JOLTS, where that statistic comes from, it is 1.9. And 1.9 is the original read that we got back in March, but they actually revised up those job openings numbers. So it was actually about 2 to 1 back in March. So it's drifted down a little bit. And what Indeed data has shown since that, the end of April, the latest data that we have government data for, that job postings in general have sort of leveled off. So at least on the, so when it comes to the numerator there, openings are still strong. And unemployment has held relatively steady. So it still looks like it's somewhere in that ballpark. That being said, even if that number drifts down a little bit, it's still going to be much higher than the ratio we saw back in late 2019, early 2020, where it was about 1.2, 1.3. So I think, broadly what we're seeing in the labor market right now is a bit of cooling, a little bit of easing, but that's coming from a very hot, very tight labor market. And if things do cool down, they could still be pretty hot, especially compared to what we're seeing before the pandemic.
I can't help but wonder, do you think that when, Powell comes out, tells everybody the economy is strong, this has to be probably one of those metrics that he's looking at, right? Because I think about how long it takes to get through processes within companies to open those job openings, but also, I mean, they can take them off the market overnight. So are they waiting for that pullback to be like, oh, okay, we're starting to get a little bit of that cooling that we want to see?
So that has been a statistic that Powell has mentioned in the past. I think, before this meeting that we had this week, 2 meetings before, that number popped up a lot. I don't think he specifically mentioned that ratio this meeting. And I think that is interesting in light of what we also saw from the unemployment rate projections in the summary of economic projections that FOMC members release at these quarterly meetings. And what we saw there is that they are seeing unemployment not only be higher than what they were projecting back in March, but that unemployment is, at least in their projections, looking like it's going to be rising over the next couple of years. So I think in some ways, their argument of, okay, we'd like to get this ratio to go down, but really only by decreasing job openings. Now they're projecting that unemployment is going to tick up a little bit so that, both the openings going down and the unemployment going up is sort of how they're seeing the labor market ease moving forward.